Hello, Carson Block. Thank you for accepting this interview. You're a short seller. Why did you take that path?
Well, I was supposed to be on the long side, and I used to be, but I think it's a combination of just my personality type and the way that I'm wired, experiences earlier in life, and then, yeah, when I was in the markets between 99 and '02, we stayed away from the internet, bubble stocks, but I still found that managements were lying to me routinely, and it actually really left me pretty bitter. And so I left the investment business in 2002 to go to law school because I wanted to understand how to better protect myself against managements that were preying on me as an investor. And at the same time this had been happening to me, and I've been focusing on US microcap stocks, the largest companies in the world were blowing up in scandals. I mean, it was Adelphia, Enron, WorldCom, Tyco. So it seems to me that the markets from top to bottom were filled with liars and cheats. And I ended up not going back to the markets right after law school. My plan had been to return to the markets right after I finished law school, but I decided to practice law for a little bit, and then I opened up a real-world business in China, the first self-storage business in mainland China. And I got back into the markets accidentally when my father, with whom I used to work, asked me to look at a China-based company that was listed in the US from the long side, and he was very interested in the company. And yeah, up till that point, I assumed that auditors were there performing anti-fraud functions. And I'm not joking when I say that that's not actually what auditors are there for. But I looked at this company and I saw that this company was a total zero, that it had invented almost 100% of its revenue. And that changed my life, and that changed the course of my career. So I published a report on that company, not thinking anybody would care. So in June of 2010, when we published it, I was a guy with one self-storage warehouse in Shanghai, China. 1 year later, Bloomberg named me one of the 50 most influential in global finance with Christine Lagarde and Ben Bernanke. So it's kind of like winning the lottery is how I got here, I think.
You believe short selling is a force for good, and you advocate for transparency. However, it sometimes seems that it's difficult to know and understand your business model. Could you tell us a bit more about it in terms of first, where are you located and registered?
Sure. First, I'll make a point about force for good. I do believe it can be a force for good, at least as we do it, when we focus on calling out companies that are at least misleading investors, and that's usually what we do. Sometimes calling out companies that are over the line legally and are committing fraud. But one of my activist short selling contemporaries, Andrew Left, who famously retired from activist short selling a few months ago after being short GameStop, the way he puts it is, you want to change the world? Great, but you can't do it from within the markets. So there's definitely, a different viewpoint out there that being a short seller doesn't change anything. I think it can a little bit, but in any event, not everybody agrees. Our model, I think, can be explained pretty simply. We identify companies that we think are very much misleading investors or are frauds. We do our research and prepare to go public. We short the stocks, and then we go public with our findings. Now, in 2015, we began managing outside money. So we turned into a fund manager. So when we say that we're short, we actually mean that funds that we managed are short. And but it's essentially the same model. Take a position and explain why we have the position.
And for which activities are you regulated?
So we are registered as investment advisors with the SEC in the US. So we're fully registered, meaning that there's a category of smaller asset manager in the US that would have a lighter touch regulatory regime applied to it, but we are actually in the most regulated category, short of being systemically important.
So you can manage hedge fund, mutual funds, manage accounts?
So we don't do managed accounts. We manage hedge funds, or private funds as they're called. So our registration status allows us to sell these funds only to qualified investors. So people who have the highest category of net worth or sophistication to subscribe to our funds. And
in US, but also in Europe?
Well, we're not registered anywhere in Europe, so we're not permitted to actively market in Europe. We do from time to time receive what are known as reverse solicitations from Europe. So somebody contacts us inbound with interest in the funds, but we are not permitted to solicit investors from Europe ourselves.
And how much assets under management do you have?
So every year we file a Form ADV with the SEC, which has that number. I think the last number that we showed was for the ADV that we filed in March was probably about 260 million. But I think that we should be lower right now, because one of those was an SPV. We were long something, it got acquired, so we've redeemed that capital, and we recently did a partial redemption of our primary fund, in that we felt it was getting too big, so we returned some of the capital to investors within the past few days, actually.
Okay.
So we're approximately 200 million US, give or take.
And do you sell also your research?
No.
You keep it for you?
Well, so I guess when you think about our research, there's what we do internally, and we have thousands and thousands and thousands of emails usually per company that we look at. And then if we go public with a company, or usually when we go public with the thesis, it's some form of a report. And so those we don't provide to anybody ahead of time. We just publish those.
And could you say who are your clients?
Well, our clients are mainly institutional investors, so funds of funds, some family offices, some endowments. Those are our primary. That's the primary type of client we have.
Okay. And what about your process? How do you find companies?
Well, a lot of times, so what we do, it's very qualitative instead of quantitative. So we don't sit there and run screens and look for ratios that seem unusual. And the reason for that is, I think without having a lot of context for a company, we get a lot of false positives and a lot of false negatives. So we're very qualitative in our approach. So a lot of times what we do is we ask, okay, what is really hot but seems maybe like it's too good to be true? And so then we'll identify companies that way, and we'll start reading transcripts often of calls that the company has had, and we're looking for really promotional language, or we're looking for questions that management seems to dodge. So those are some of the ways that we primarily get interested in companies first. Plus, we also keep track of people who've been associated with problematic companies in the past, because usually once you're a director or officer of a problematic company, you're kind of stuck in crap company world. Who in real, the land of real companies is going to hire you? So following people around is also an important way for us to find ideas. And then the final part is, and we do get, for lack of a better word, we do get pitched ideas by hedge funds that are already short companies, and they're looking for somebody who would who would make the story public. So we also get shown ideas as well from time to time.
So you sometimes are a follower?
Well, we're never a follower in the sense that, if a fund brings us an idea, I mean, we have to be able to recreate the work, and we usually have to be able to build on it. And the funny thing is, it's given us insight into how so many of the short sellers out there, the professional short sellers, but most of them are at long short funds. We do often find a number of issues with their work. I mean, to be fair, they have a different business model than we do. We can spend months on one company. They have to have, 40, 50, 80 different short names in the book, so they can only do things kind of quickly. So a lot of times when we are shown these ideas, we do find issues with them, but sometimes we feel like, okay, this part of the thesis we don't agree with, but actually what we find, we'll find something internally that's really interesting over here, and we'll dig deeper there. So that's something that happens on occasion too.
And how many open positions do you manage at the same time?
I mean, it varies, but probably we've just launched a new fund that will have more positions. I'd say in our primary funds, probably 10-ish. And then in the fund that we launched, when we think it's built out, will probably be 15 to 20 ultimately.
That's Capital Domino, your new fund?
Domino, yes.
And do you use leverage?
I mean, technically when you're short,
yeah,
you're,
above one.
So with the new fund, Domino, and I want to be careful here so it doesn't sound like I'm marketing it, because the SEC doesn't dig marketing of funds. But the idea with Domino is it's market neutral. So for every dollar that we're short, we're going to be long a dollar. So, in theory, I think when we're fully built out, we'll probably be 200 gross, net zero, give or take.
With futures?
No, generally not with futures. So
you will be long. You will be long in stocks.
Yeah. So what we do on the long side actually for the hedges is we hedge by factors. So we use factor baskets, and the way it works is we subscribe to a software package that'll tell us, okay, 60% of the beta movements here are explained by mid-cap telecom, and then 40% by European stocks. And so then we go to our counterparties, our prime brokers, and say, okay, we want to construct a hedge basket that has roughly this factor weighting. And so then the counterparty will put together a basket, come back to us with the names, and we'll iterate it. I mean, a lot of times we're pulling names out where we're like, that's a fraud, and that one might blow up pretty soon, so let's take that one out. We don't want to be long that. And after we iterate the basket a few times, then via swap, we'll go long that basket. And a number of times when we're on the short side, a number of times we're shorting on swap also. I mean, it's kind of market by market, and it just depends on, how much collateral we want to move around, from the cash prime to the what we call the unregulated entity. So anyway, it might sound exotic, but in hedge fund world, I don't think it's that exotic.
Okay, so if we talk again about global opportunity, which is the main fund, you said you have like 10 open position usually at the same time.
I mean, yeah, I'd say 10 to 12 probably.
Okay, and usually how much are you invested in percentage?
It varies. I mean, a lot of times we're cash, or I shouldn't say we're entirely cash, but it really depends. I mean, that one we kind of scale up and scale down risk. So that's one of the things where Domino is different. Domino is going to be kind of constant level of risk. But yeah, we'll get more concentrated in Global Opportunities Fund, than we do in Domino. So it's kind of different way of managing risk in the two funds.
And are you personally invested into your fund?
Yes, I am. So that's one of the things that, for all the criticism that gets leveled at short sellers, including in the U.S. recently by somebody who's been in the short selling world. I mean, I'm very invested in our funds, and if our funds blew up, I mean, it would have a quite material impact on on my personal finances.
But not only are you a short seller, but you're also an activist. Why is that?
Well, so I got into this business accidentally, really. So if you go back to when I found that company in China, or my father asked me to look at that company in China, I didn't know what to do with this once I realized it was a fraud. My father didn't want to short it, so I was basically on my own, and I had no money at that point. I burned through pretty much everything and then borrowed a bunch on top of it because of my self-storage business in China. So I didn't really know why I was putting this report out there back in 2010. Thought maybe I'd get some consulting business from it, or if I could just say, hey, I really know how to look at companies in China. I didn't realize that there was a systemic issue of fraudulent companies listing in China. So I just put together this report, kind of inventing the template for this report as I did it. And I bought $2,000 worth of put options. The guy who worked as a consultant with me on that project, or consultant for me, he also bought $2,000 worth of put options and sent it out to 50 people I had last talked to in the markets maybe 9 years earlier. And the report went viral. And then I realized that Chinese stock fraud thing was endemic. So I had a choice to make in the summer of 2010. It was clear that there was a business for me to do, exposing or identifying and researching China-based frauds. But I basically could have chosen between selling my research to one exclusive large hedge fund, selling my research to a group of hedge funds, or trading and disseminating my research openly. And when I looked at the first two options, there were two issues with providing the research to one or a handful of funds. One option is I questioned the viability of that business model because these were frauds. And if nobody tells the market about the fraud, is there anything to stop the stock from continuing to do this? So number one, I questioned the viability of that. But number two, it just wasn't very satisfying. At that point in my life in 2010, I felt like I had been screwed in the markets, 99 to 02, by liars. And then I'd been doing business in China for several years and getting punched in the face repeatedly by all the liars and cheats there. So I was in need of some emotional satisfaction. I was in need of some payback, basically. So the first few years of doing this, when I was exposing these companies, it was really what I called at the time a controlled rage, where I was getting payback, against the Chinese scammers who had screwed me, but then also against just the market charlatans I had run up against early in my career. So it was just really emotionally satisfying from that perspective. So I think even absent the question of whether the subscription business could be viable, I think even absent that, I would have chosen this just because, I don't know, like I have a hard time anyway just seeing something that's problematic and keeping quiet about it. So, but especially when I feel like I can get revenge effectively if I do go public.
Do you currently have problems with the French authorities, including the AMF? What is the current situation with Casino?
Well, I mean, as far as Casino goes, I'm as current on that as you probably are. The AMF issued a press release in December of 2019 announcing that it was closing its investigation into Casino and taking no action against us, which I think is the right decision there, obviously. So yeah, nothing since then. I mean, we shorted we were publicly disclosed as short Solutions30 as of May of 2019. So I've had no communication with the AMF about Solutions30 since then. But so I don't know. Look, if I knew whether there was an investigation, I wouldn't comment on it. But I have no idea whether the AMF is doing anything and what the AMF is doing. But should they have questions, as before, we're happy to answer them.
Do you usually get more in trouble or get criticism for being a short seller or an activist?
Well, I mean, I guess if you define trouble, I mean, we've never been sanctioned by any regulatory body anywhere. The closest we came, I guess, was France Casino. I shouldn't say the closest, but just the most, I guess, arduous explanation we've ever had to give was with respect to Casino. What was the problem there? I mean, from the perspective of our critics, I mean, they call us short sellers, so I think that's what they seize upon. But if we quietly shorted something, they wouldn't have had that big of an issue. So they say, if you listen to what our critics say, it's because we're short sellers. But the reality is we attract their attention because we go public and we're activists.
Mm. Do you consider safe from the French authorities by now, or by being in the US?
Well, I mean, look, our intention is never to evade a judicial process. I mean, had there been a sanctions proceeding in France over Casino, I would have completely disagreed with the premise of that proceeding, but we absolutely would have defended. I mean, we were responsive to AMF requests placed through the SEC during the course of that investigation. I think we provided, if I remember correctly, approximately 6,700 files and documents that we had to the AMF. So, I mean, it's not a matter of, well, we're in America, so we don't care what anybody else thinks. Presumably, if we were to avoid obligations imposed by foreign regulators, presumably our counterparties would cease trading with us. So we don't have that option of saying, nah, we don't want to listen to you. But look, I mean, a good corollary answer to that is Steinhoff. We knew Steinhoff was a fraud before it collapsed. We considered very strongly going public on Steinhoff and pointing out these fraudulent transactions that we were aware of. The problem was Steinhoff had become home regulated by South Africa. So when I sat back and thought about that, I thought, okay, the guys we'd be going after are South African. They are regulated by South Africa. And so should we go public, should we go activist on Steinhoff? I mean, how hard really would it be for them to bribe somebody at the South African regulator to, start an investigation and mess with us? And do I want to put my hands in do I want to put our fate in the hands of like South African justice? The answer is no. But unfortunately, when I looked at it, the United States and many other countries would recognize judgments from South Africa, or at least we would have to be arguing in US court that we were not accorded due process in South Africa. So, when I looked at that, I said, this could be a great trade, and it's a fraud, but like, I just don't want to go anywhere near the South African legal system. And to be honest, like my faith in France was kind of tested, too. I mean, I thought things got a lot further than they should have with the Casino investigation. Ultimately, the rule of law prevailed, but I was wavering for a while on really whether I had faith in the rule of law in France at a certain point in time. But suffice to say, I don't have any faith in the rule of law in South Africa, so we weren't going to go anywhere near that.
let's talk about Solution30. When did you become interested in Solution30 and why?
So we became interested in Solutions30 in early 2019, and one of our analysts came across it. So as I recall, and I'm not fresh on this, being that it's 2.5 years later after we first started talking about it, but I think it was a combination of, okay, seems too good to be true. So they're in a business that nobody else is able to do at scale with real profitability, but they do it so much better than, I mean, they do it profitably, and they grow rapidly. So possibly too good to be true. Then bad guy connections, like lots of bad guy connections and persistent bad guy connections. So that part's odd. Then this weird thing where they forged their English language audit letter for their 2017 financials. Now, they didn't write anything in the English language version that wasn't in the French version, so it's not like they changed it. But this was a very important point to me, and I think something that a lot of people don't really get. But the way I look at it is, if you are a legitimate business person, I think at no point does it cross your mind that the best way to get an English language audit paper or audit report is to translate it yourself, cut and paste your auditor's logo, wrong logo by the way, and the signature block, put it on there and file that with the authorities. Like, normal people don't think that way. Okay, like, you run a legitimate business, that just doesn't occur to you. You think, shit, we got to pay another 5,000 euro, or yeah, they can't do it in time. Okay, well, we'll just wait for it to get here. So that was important. And then on top of that, they weren't publishing cash flow statements, so it was harder to analyze their accounts. Now, they weren't required to under Luxembourg GAAP, that's true, but when you looked at the size of that company, to me, that was just odd. So if we looked at it this way, I mean, when we feel something is too good to be true, I think there's a high probability, we've been doing this a long time, there's a good probability that we're right. Okay, so if we look at the reciprocals here, so if we say, okay, is it too good to be true? I would give it, or at that time, I probably gave it a 25% probability that there was no serious problem. Okay, so it's only 25% probability, in my view, there was no serious problem. Okay, now, bad guy connections. I mean, it's not one, and they kind of stick with the same guys, and then they make like Zito's boy became president of CP Telecom despite having no telecom experience. This does not look accidental to me. I'm going to say 25% probability, nothing serious is wrong there. Guys who would forge their audit letter, again, their English language, the translation of their audit letter. Again, normal people don't think that way. So I'm going to give it 10% probability, nothing is seriously wrong there. And then don't publish a cash flow statement. Okay, 50% probability, nothing is wrong there. But if you take 25% probability, nothing is wrong, times another 25%, times 10%, times 50%, I'm looking at it in the early days thinking the probability that this company is not seriously messed up is close to zero. So that's how we look at it. And going back to that point where I say we're very qualitative, we're very focused on these behaviors and these behavioral type indicia. So from my chair, this was almost certainly going to have a lot of skeletons in the closet.
But how did you find the company? Because you are in the US, Solution30 is like French mid-cap. How do you find Solution30?
Well, I mean, we're constantly looking in Europe. Let me rewind a little bit, and then I'll directly answer your question. But we realized in 2014 that, I think it was late 2014, that Europe is probably a hotbed of corporate crime. And the reason we realized that was, well, maybe I shouldn't say corporate crime, let's say corporate dysfunction. So the way that we realized it in 2014, we first came across this AIM-listed company called Africa Minerals, and it was headed by a guy named Frank Timmis. So Frank Timmis he had actually been convicted previously of heroin trafficking, not heroin possession, heroin trafficking. I think he was banned from 1 or 2 exchanges, censured from 1 or 2 others, and yet here he had this AIM-listed company with a market cap over 1 billion US, and was, and so we talked about this internally, and I mean, some of the red flags with Africa Minerals were so obvious. I think they were claiming that they were losing over $20–25 million a year to fuel theft, which when you divided that by, how much fuel can fit in a tanker, you'd realize there's like a long convoy every single night of trucks stealing fuel. It just wasn't plausible. But we thought, hey, this is easy stuff. This is page 1 of Google search results stuff. So, I'm assuming that investors in Europe, they're aware of this, they just don't care. But then the FT Alphaville started publishing some of these facts on Africa Minerals, and each time it's like, so we're looking around like, I guess investors didn't do a Google search and look at page 1 search returns. And we saw the same thing happen. I think it was with one of the Spanish EPC companies. I think it was, I can't remember. Oh, Abengoa. Like Abengoa, the problems were well known. We thought everybody got it, but they didn't, and then it blew up. And then the final one where we really had to say, okay, we need to focus on Europe, was a company called Gulf Keystone. So it was run by an American guy, which actually recently was exposed, having bribed officials in Iraqi Kurdistan. But the CEO of Gulf Keystone he went on CNBC Europe, and he's telling the world that they had $1.5 trillion worth of reserves in this tiny little crap company listed on AIM. So again, we thought people must know this, but then once it started, the facts were being published, I think again by Alphaville, the stock just fell apart. So that's when my partner, Freddie Brick, who's from England, that's when he and I had this conversation in which I said, look, man, I don't want to be, I don't want to sound ethnocentric here, but you guys in Europe just really don't seem to do any work. And he said, oh, it's totally true. We Europeans are super lazy. And so, and then we decided like, hey, we need to focus on Europe. So we've always been looking in Europe for highly dysfunctional companies. And I suspect there are a lot more. The battle that we went through over Casino and then over Ströer in Germany, those things slowed us down for a few years. I think you would have seen us shorting a lot more continental European companies during those years, but for the Ströer and the Casino investigations. Now, in this case, one of our analysts was digging into European companies, and he's somebody who's from the UK as well. So he was digging in and came across SOLUTIONS30 as a potentially too good to be true name.
Were you tipped on this, or did you find
No.
the company?
No, I mean we found the company by again looking at the stock had been going up a lot. The revenues were growing rapidly, but it was also, I think one of the other things that stood out at the beginning was that it was domiciled in Luxembourg. There just aren't that many public companies of a reasonable market cap that are domiciled in Luxembourg. So it's just one of those things that made it stand out. I mean, going back about 2.5 years, I can't remember exactly what the factor, like the first factor or second factor was that made our analysts latch onto it. But but it was, it was just, a combination of potentially too good to be true, Luxembourg, and then some other, surface facts that were, that were just really surprising.
So you weren't aware of that anonymous report that we received?
No, and look, I want to be respectful here, but the company, so we've said publicly multiple times that we didn't write that report. We've even said that in an answer to a complaint that an affiliate of Solutions30 filed against us in the US. Now, I know that Solutions30 and its Image 7 PR firm are propagating this notion that we authored the report. What is their evidence? I mean, at some point, somebody needs to say, okay, guys, you've said this a bunch of times. Do you have any evidence Muddy Waters did this? So that's the first response. The second response, though, is who cares who wrote that report at this point? You've got EY refusing to issue an audit report because they think that the misstatements could be material and pervasive in the financial statements. And that's what EY has said publicly. Now, understand that the way auditors speak publicly is very, very restrained. You know, and it's kind of funny because we get criticized for our reports being very direct and plain spoken, but you know, then EY as an auditor that has to worry about statutes, has to worry about the rules of professional responsibility, has to worry about its client suing it. They write something that's very measured but still clear, and in that vacuum, in that absence of them being explicit, the company is trying to take advantage of that by promoting this narrative that, well, you know, we can't be that messed up because they didn't actually find any wrongdoing, although EY says we were prevented from doing our work, and the investigation that was carried out by the board we think was also too narrow in scope. You know, that's what EY is saying, and in that, you know, and because they wrote it in kind of a measured way, the company is seeking to take advantage of that. But I go back to that point. Who cares at this point who wrote the anonymous report? This is pretty damning what's come out from EY. You know, now the truth is we were about to publish a report on Solutions30 when that anonymous report was circulated. We had the internal draft. I was days away from coming out with the final draft to publish. When the stock took a dive, we wondered what was going on. You know, somebody said, yeah, there's a report supposedly going around on this company. And we were not happy with that. We thought, you know, you might censor this out, but I think I said, oh, shit, are you kidding? And then the stock recovered, and then the report appeared on Zone Bourse, and we looked at it, and look, there were things in there that I won't say we agreed with. They're just because we didn't research them, but we had to ask ourselves the question, do we have anything new to say that's important? And we felt that that report really covered a lot of the things we were going to say. And so then we said, all right, we need to sit back and watch what happens. And the way the company responded, that's when we thought, okay, that's not true. They've just made several statements or misstatements of fact. And so we thought, well, what do we do about that? And, you know, we didn't have enough for a report, but I said, okay, look, I'm going to write an open letter to Jean-Baptiste Fortis. I'm going to lay this out. These are the problems with your responses. And he then responded again, and there were more problems, and we laid that out in another letter. The company engaged Image 7, which is probably the premier or one of the most expensive PR firms in France, and then they decided to stop communicating publicly, and so maybe this doesn't mean much to the average viewer, but to me that was actually, it was kind of funny because you sign up one of the most expensive guys out there for communication, and then you decide you're going to stop communicating. I think that's because they realized that the more they opened their mouths, the more trouble they were getting in, because they were lying. There are lies there. And in the Deloitte report specifically, we wrote about this after those reports were issued, there were statements that Deloitte's research showed were false, that the company had made earlier. So yeah, so in any event, that's the actual backdrop there, is we were ready to go with our report. We were about to go with our report. We were preempted. I would have preferred that we weren't preempted and that we got the chance to publish it, but net, this is normally what a win looks like for people in our business. When you get an auditor who's saying, we're not going to issue an audit report, we think that the misstatements could be material and are pervasive. We think there's wrongdoing and we were interfered with in the course of our audit while we were trying to investigate these matters. That's basically a win in our business.
Were you already in position at the time of the release of the report?
Well, yeah, we've been in the name since May of 2019. So, yes.
But did you change your position following the report?
I don't recall the timeline of trades. I mean, there was obviously following GameStop, this period when we reduced risk across the board, and we decreased our position size then. I don't recall where we were exactly at the time that you guys posted the report or the anonymous report. I don't know if we were a little bit larger than we had been, or the same size, or probably weren't smaller than we had been.
And what was your highest short position on Solution30?
So I would refer you to the public filings. I mean, my recollection is that we were disclosed as having been short at least 60 basis points of the capital. So if I remember correctly, we were between at peak 60 and 70 basis points of Solutions30's outstanding.
So like 6 to 7 million euro, the size of
probably.
the.
Probably.
So that's not a big trade for you.
I mean, that's one thing people don't understand about short selling is that most short selling.
You said that you were managing 200 millions of dollars, and that you have around 10 to 12 open position. So Solution30 was not a big bet, right?
No, it was not. It was not a major contributor to P&L. It was not a major contributor to performance in any year.
And so how much did you earn with this position?
I mean, we've never disclosed that in the 11 years I've been doing this, but it's not material. I mean, it was an okay trade, but it would have been okay for something that we weren't activist on. When we go activist, we obviously assume that we could be sued. We assume that, we could go through an investigation, and, like the AMF investigation and over casino cost over $1.5 million in fees and expenses. So our total P&L on Solutions30 is probably low single-digit millions.
And so it was not a big contribution for your performance for the month of May, because at the end of April, the performance of your fund was like 9.1% for 2021. So what will be the performance of the fund for the end of May?
Okay, so
around.
Interesting you got that number. Now, this is where the SEC prohibits us from publicly discussing performance because, again, we are registered only to sell our funds to qualified purchasers. So, but look, it was, the short of it is, it was a nice addition in May, but I mean, May was, we had some trades where we made a little money. We had some trades where we lost some money in May. It was another trade. I won't, it's better than a punch in the face, but it wasn't, amazing or anything.
Just to come back on, so in this case, you say you didn't have any source, but on other cases, do you have sources, and do you pay them generally?
So when you say source, I mean, we do not talk to people who work for companies. Like that is obviously that can be highly problematic. So
work for or have worked for?
I'm sorry?
Work for, but I've worked for.
I mean, it's very rare that we hear from somebody who worked for a company. And I can only think of one example where we talked for a while to somebody who had worked for a company. And I think he'd been out of the company for 1 or 2 years at that point in time. So that I can only think of one example there. So now we will, on occasion, hear from people who've been in the investment industry and are, they're not currently in a job and they got really interested in the company and, they've researched it and, they'd like to, they'd like to show us the idea. And if we make money on it, they want a percentage of the P&L. I mean, we get those sometimes. And sometimes those are interesting, most of the time not. But yeah, I mean, that's not somebody who is at the company. That's somebody who's approached it as an analyst would approach it.
But do you think you should pay for incriminating information? Do you think there's an ethical issue there? What's your position on this?
Well, so you have to, when you say incriminating information, I mean, you have to explain what that is. I mean, if you look at SOLUTIONS30, everything is publicly available. Okay, all these filings are publicly available. Now, it takes a lot of time to dig into them. It takes skill to follow the breadcrumbs. But if you look at, I mean, SOLUTIONS30 is a great example, I think, of just how you can spend so much time digging, you don't know what you're going to get, and then all of a sudden something takes you in this direction of more publicly available information. So if you indulge me for a moment with the SOLUTIONS30 example, there we were, we'd already written a few letters on SOLUTIONS30. We brought up SOLUTIONS30 Eastern Europe, and this guy, Sal Maraghi, and strange series of transactions in which Sal Maraghi was involved. And then our analyst, who was the one who brought this to us in the first place, he just decided, I'm just going to start Googling and searching, go really deep into search results for different entities this guy owns. And then next thing you know, he comes across this court case in Hungary in which Sal Maraghi and his entities, and it was fairly recent, they were suing Bank of Transylvania to reopen their bank accounts. And so it's a decision, this is what he found online, it was a decision in the case, and it made the point that Bank of Transylvania had, seemed to make the point that Bank of Transylvania had concerns about the compliance of these accounts with anti-money laundering rules. And so they also mentioned payments to a Porsche dealer specifically that Bank of Transylvania had flagged. So we put this letter out. And then the same analyst, after we put the letter out, he said, you know what? I'm wondering if there's something in Hungary where I can trace, where I can look into these Porsche payments. And so he ended up on some registry that included leases of automobiles. And so then he saw like the Porsche leases, BMW leases, a Ferrari lease in the name of SOLUTIONS30 Eastern Europe. So now, if you take each one of these things, it's unclear what that means. But when we combined it with our understanding of the company, our other background work on Sal Maraghi, like what directorships has he had, where has he been shareholder of companies, who are the other directors and officers and shareholders of those companies, some of whom have been imprisoned, etc. And we added it all up. We thought, okay, we think what's going on here with these automobile leases is we think that they're running a VAT carousel fraud and that they're just cycling these cars through different EU countries collecting VAT rebates without paying any VAT on them in the first place. So that's, if that's incriminating information, like nobody provided that. That's just digging, and and then connecting dots with other information that we've dug up in the course of this. So nobody ever pinged us to say, hey, look at this guy Sal Maraghi, this dude's a problem, and look at these people. No, it's all out there. You just have to find it, and that's the point. We have the business model that allows us to do that, and a lot of other people just won't do that work.
But did someone tell you where to dig?
Google. Google knows all.
And do you feel that there's enough, that you have provided enough evidence of illegal practice? Is it a bulletproof case?
Well, to be
do you
clear,
need to provide?
So to be clear, you know, and this is also one of the frustrations that we have with our critics in this matter, is that we're not on the inside. We don't have access. Okay, what we can see from the outside, these are fragments. But if we can see them, you know, I'm betting that there's a lot more on the inside. And I think that's that seems to be exactly what EY was trying to get at. EY seems like it knew what it wanted to look at and asked the company to facilitate that. And the company said, no, we're not letting you look there. So I think EY was close to getting smoking gun evidence of wrongdoing, criminal wrongdoing by people at the company. For us, I think what we've amassed is in the US anyway, there are two different legal standards. So if you go into court and it's a civil claim, then you prevail if you have a preponderance of the evidence. So call it 51% probability you're correct. Now, to be criminal conviction requires beyond a reasonable doubt. So you have to be 97, 98% probability that you're correct, maybe even 99. I think what we furnished what we have is enough to meet a preponderance of evidence standard that there are serious problems and, you know, fraud and involvement in money laundering at the company. I think what we found from the outside, these fragments meet that preponderance of evidence standard. Can you take this alone and prosecute to a level of beyond a reasonable doubt and win? Probably not. But the point is, if you're a regulator, you can investigate, and then I think you can. And the one thing that I haven't mentioned so far as well that is also really significant to me, Deloitte exposed that 6 months of Fortis's emails were not only deleted, but were unable to be recovered in a forensic analysis. Right? That's professional deletion. That's not an accident. So when you have, you know, in a criminal world, we'd call that evidence tampering. But I still think that if a well-resourced investigation were to occur, that they would be able to ring these guys up on some serious charges. Maybe, you know, if nothing else, the European equivalent of obstruction of justice. But yeah, this is not, again, normal companies do not have their CEOs lose 6 months of emails.
But how do you manage the risk of defamation? Because even if you feel like the risk is very low, there is one. And damage are huge for the company.
Yeah. Look, that's something people don't understand is, I mean, this business that I'm in, you know, like one defamation lawsuit goes the wrong way, and, you know, like, again, I'm financially back to square one. I mean, that is the reality of this. But we look for facts. So we look historically. We generally aren't extrapolating the future. You know, we're not saying, hey, we think profits are going to decline because blah, blah, blah. We're looking backward and we're saying, you know, you reported that you paid this much. This company reported receiving only this much. There's a delta here. What is that? And in this case, I'm referring to this one transaction where Solutions30 came out and said, well, we paid a service provider a fee for the transaction. And we said, what service provider ever would have received a fee that big? Anyway, so we're uncovering facts, and these facts have a basis. I mean, we cite to the facts or the sources of the facts. We provide, you know, links to the facts. And then we form opinions based on these facts. So I'm not concerned, as long as we're diligent in our research, I'm not concerned that we're going to have a problem in terms of liability, because these are facts. And my conclusion, at least I think that my conclusion, and we vetted this internally, it was actually an interesting discussion with Solutions30, because we did have one analyst who early on was pounding the table on money laundering. Now, I know fraud a lot better than I know money laundering. There's only one instance that I can recall where we were, where I said, okay, this is money laundering. So I recognized, I said early on, like, okay, I think this is a fraud. This is why I think this is a fraud. But I said, I don't get the money laundering thing. And in fraud short world, people banging the table about money laundering is actually kind of common. And I'm always pushing back when I hear that. Like, I don't think you know what money laundering means. How is this money laundering? Like, don't just throw that out there because it's, you think it explains things. But so I pushed back hard internally on money laundering thesis. But as we got into details of these transactions, and and I started studying up some more on money laundering techniques, then I became convinced. And I actually said to the analyst, I said, man, I take it back. I know I was actually giving you a pretty hard time internally, and I was kind of making fun of you at times in a joking way over your fixation on the money laundering. I was like, but I'm there. And the whole team, I think, moved in the same direction. So from skepticism about the money laundering thesis to belief that it's probable. So I'm willing to defend that conclusion based on the facts that we've assembled and published. I think it's a reasonable conclusion, because that process that we went through internally, we beat that conclusion up a lot before I ever said it publicly.
But you mentioned Deloitte earlier. But Deloitte and Kling, they seem convinced that there's no link between Solutions30 and the mafia. So it almost seems like you have some more information that others don't have. Okay,
so first of all, I think people have to understand what role these investigators perform. Okay, these investigators they agree to a scope of engagement with the company. All right, and usually those scopes are pretty narrow. And that's also what EY was saying in its letter, that EY wanted additional work done in this investigation that was not done. So EY is telling you it's too narrow. So first, they narrow the scopes in these situations. And we've had, a number of the delistings. We have 8 delistings, companies we've published on, and then we've called frauds. 8 of those have been delisted. Almost every single one of them followed this template of engage Deloitte Finance or somebody like that. They give them a really narrow scope of investigation, and you don't know, as the investor on the outside, you don't know where they did look and where they didn't look. And almost always, those reports that result from it are filled with, we found no evidence to support the allegation that X. Okay, but Solutions30 went further. So not only is there a narrow scope, and again, one that EY criticized, then they cut it in half. So they said, okay, with the same transactions in the same countries, Didier Kling, you look there, Deloitte, you look there. Now they've created a crack in the middle where information can fall through. Then you take, look, when the whole point of Didier Kling and Deloitte doing this business is to not embarrass the client who's paying them the money. And when you read these reports, you can see that. So one of the concerns that we had expressed was over Solutions30's unbilled receivables. You generally see large unbilled receivables balance and revenue booked from recognition of those when you have a company that does a lot of construction contracts, percentage of completion. And we made the point that we don't see, based on any of the company's descriptions of its business, how it would have a significant business line where it would use percentage of completion accounting. So Didier Kling looked into this, right? Their language was, we confirmed that Solutions30's recording and recognition of unbilled receivables is consistent with its policies. What the fuck does that mean? It means we didn't look to see whether they're substantive. We didn't look to see whether there's anything that's really happening here. We asked, do you have policies for recognizing them? Well, yes, we do. Okay, and did you follow these policies? Oh, okay, good. That's the role of Didier Kling and Deloitte in these companies when they come in to do these investigations. They are there to not embarrass the client, and they are there specifically to not look where the client doesn't want them to look. And again, you don't have to take my word for it. EY is spelling that out for you in its letter to the board. So when they say they didn't find evidence of, of mafia links and money laundering, well, where did you look, guys? And where didn't you look? And where did EY want to look that you didn't look? Those are the questions. And P.S., when you have the CEO who deleted 6 months of his emails, how can you tell me this is a credible investigation? Go ask any law enforcement officer. Okay, how would you view this fact? You're investigating this company for potential wrongdoing, and the CEO has mysteriously deleted beyond the ability of our software to forensically reconstruct 6 months of his emails. Does that scream innocence to you, or what would you, former police officer, how would you interpret that scenario? I mean, it's basically like this, and I'm sorry if I'm beating a dead horse here, but if you have a high degree of conviction that there are drugs hidden in a house, the house has 4 rooms, and you're permitted to search only 3, and you find no drugs in those 3 rooms, do you accept that there are no drugs in the house? Well, if you're Didier Kling and you're Deloitte, you're paid to accept the 3-room search in a 4-room house. But EY did not accept it, and no reasonable law enforcement agent would accept that either.
Okay, so do you always have a clear conscience when you move, and but what do you think about the presumption of innocence? Being someone is innocent until proven guilty, because the damage is done now.
Well, so I mean, look, I'm not investigating the company from the inside. I'm not investigating the company from wrongdoing, for criminal wrongdoing or the individuals for it. I think there should be law enforcement investigations. I think that if they do a credible job, that there will be indictments in U.S. parlance and trials, and that they should be presumed innocent at trial until they are proven guilty. However, my standard is, like I said, preponderance of the evidence. This is all we can do from the outside. And if we weren't good at it, nobody would care. Because I think what a lot of people in Europe don't understand is that there are probably hundreds, literally hundreds of short activists you've never heard of. We subscribe to a database of short activist campaigns. And as of the end of 2018, it had recorded from 2005 over 1,700 short activist campaigns. All right, vast majority of those people never get any recognition. So for us to rise above the noise and for people in Europe to know who we are, there's probably a reason for it. We're probably good. We're probably better at this than almost everybody who's tried short activism. So are we entitled to research companies, present facts, and state our conclusions? I mean, look, anybody is entitled. Should the market take it seriously? I've spent the last 11 years of my life, putting blood, sweat, and tears into this business in order to get it right. And I think our track record speaks for itself there.
Most of your research seems to be more targeted on European company or Asian company. So is it that you said that Europe is a fertile ground for financial crime, but don't we find it in the US as well?
Yeah, but actually what you find in the US, and this is what most of our business actually is, it's the company that's not committing fraud from a legal standpoint. It's just they stay within the spirit of or they stay within the letter of the law, but they violate the spirit. That's a casino type situation. I mean, we never accused casino of committing fraud. We just said, hey, casino, stretches these accounting standards to the maximum. It's all legal, but at the end of the day, it accomplishes the same thing. It confuses investors and disguises the economic reality of the business. So that's really what goes on a lot in the US. I mean, hardcore frauds, yeah, we have a lot in microcap space. And then, of course, the US listed China names are, I mean, that's like huge minefield of fraud. But your mid-cap, large-cap U.S. companies, by and large, it's not something where it's not something where it's clearly fraud, unless you find emails where they're saying, hey, this isn't a good faith estimate, this is a joke, but let's put it in there anyway. Unless you find that email, you don't have a fraud case, and that's a lot like our work on Burford. So Burford's AIM listed. They now have a dual listing in the U.S. Litigation finance company, and all of their litigation assets are level 3 fair value assets, and that's what Enron was basically, where you mark to model. And so we're of the view that many of these, or that these key marks with Burford, or at least we were of the view as of 2019 and probably early 20. We haven't written on Burford in a long time. But we were of the view that these were not good faith valuations. Can I prove that in such that somebody could make an accounting fraud case? No, but I think if you just apply logic to that, and that was our point. We look at some of the cases that they had marked up and they had considered to be wins, and we're like, yeah, but you lost the case. How can you call it a win? And some of the machinations around that. So that's like our bread and butter for the U.S. is just abusive accounting. It's legal. We're not as well known for it because I think it's kind of boring compared to the salacious stuff like the Chinese frauds or SOLUTIONS30 sort of things, or even Ströer with all the self-dealing. But yeah, that's mostly what we do.
And did you expect such a fall on SOLUTIONS30? Did you have a price target?
I mean, we don't have price targets. Did I expect well, look, I didn't know what was going to happen with the audit. I've seen far more frauds get unqualified audit opinions than I've seen frauds not get unqualified audit opinions. Because to get an unqualified audit opinion, normally all you need is good paperwork. It's one of the misconceptions the public has about auditors is auditors aren't really digging into the business. They're looking at stacks of paper for the most part. And if you have an invoice here and a purchase agreement there, like, okay, it matches, let's move on. So I think that what happened with SOLUTIONS30 with EY is because EY is in a particularly sensitive situation right now after NMC, after Wirecard. To some extent, what happened with Luckin in China might have influenced it. But I mean, when EY pulled the plug on Luckin in China, I felt that was probably a result of NMC, our criticism on Burford, because EY is the auditor there. And again, we never accused Burford of fraud, but the marks are just super aggressive. And I think that maybe stuck with EY a little bit because in the 2019 annual, there was a decent bit more disclosure, and EY took a long time to get the audit opinion to Burford's audit committee. So clearly, at least in Europe, if not globally, EY is in one of these cycles where they're really trying to repair reputation. Now you have to understand, all of the big four have these scandals, and it kind of goes in waves. Like it's Deloitte, and then it's KPMG, and now it's EY's turn. So EY will, try to do a better job for a while, and then eventually the race to the bottom of, let's earn more in audit fees and do less work kicks in, and and the cycle is going to repeat itself. So I didn't know what to expect from the audit, but I think that from our perspective, EY was going to do the most diligent job of any of the big four, of any auditor on the planet at this point in time, just because of where they are reputationally.
But isn't such an impact on the price of Solutions30 is now an issue in the end?
Well, I mean, look, the stock was halted at like about 10 euro a share and opened at 2 and change. I mean, what changed? What changed was these guys halted it for 10 days. They obviously were, to some extent misleading in their communication. The AMF yelled at them publicly. They put out a misleading report on Friday, May 21st, saying that, oh, we don't know why we didn't get the audit report. And then Sunday, May 23rd, they're like, well, okay, here's why we didn't get it. And it's bad, but we're going to argue with that in our press release here. I mean, these are really bad facts. If I were long this thing, I would probably puke it as soon as I could as well. So I don't know. I mean, like that's, I wouldn't pin this one on the activist here, in the sense that, I mean, look, if the market, so what's happening is in a way a victory for transparency and in a way so far a loss for transparency. The victory is we're seeing an auditor doing a more diligent job. We're seeing an auditor demand better access. And one of the things you also have to keep in mind with respect to how this company is audited is that it has a lot of subsidiaries, and those subsidiaries are not audited by the auditor of the parent. Most of those subsidiaries are not. Most of them are audited by, or many of them are audited by a relatively small audit firm that used to belong to the chairman of Solutions30's audit committee. And he actually did the audits, I think, for the parent through about 2005. I'm a little fuzzy on those facts, but I think that's roughly correct. But the bottom line is, that's one of the reasons why we think Solutions30 has gotten as far as it had also, is because you just had the, Grant Thornton or EY auditing the parent. But EY, this time around, wanted more transparency. And so this was a victory for transparency, that you have an auditor that's pushing for it, that you have an auditor that says, your investigation isn't good enough. We want more done. It's a loss for transparency, though, when Fortis is able to go on TV and talk about the 2020 numbers and say, I don't know why people have a problem with us. Our 2020 numbers were so great, and he couldn't get an audit opinion on those. I mean, that to me is something that this situation is unique, because normally, and I specialize in corporate dysfunction, normally at this point in time, the board is saying, look, either these guys have to go or I'm resigning, and everybody's throwing everybody else under the bus. Maybe in a way I have to commend these guys for all playing on the same team here, and the prisoner's dilemma hasn't kicked in. But the way that they're playing it, I mean, the Board of Supervisors resolutely behind Fortis when he goes out and talks up unaudited numbers that EY says probably contain material misstatements or misstatements that are pervasive and material. I mean, this part is surreal, that a CEO can be making the rounds, talking these numbers up in light of that statement by the auditor, and have the Board of Supervisors standing behind him. So that says to me, this board is highly compromised. And if there's something wrong at Solutions30 along the lines of what I think is wrong, the board's in on it too. That's what this tells me.
But isn't that too easy, denouncing illegal practices and then taking your profits before the end and the conclusion?
So what's the conclusion? I mean, so number one, I've been short this for 2 years, over 2 years we were short this. And when this stock was going up on us, did anybody shed a tear? Did anybody say, well, gee, muddy waters, you probably have a really good reason for being short, and it's not fair that you're losing money here? No, nobody said that. When people go long a stock, they do it to make money. But whenever people show up to do a job, they're doing it at least in significant part for money. Okay, this is a business, and again, we're dealing with a lawsuit in the U.S. So I don't know, that'll cost us blah $100,000 to deal with. So yeah, I mean, when we've been short something for 2 years, when we've lost money on it at one point, when the auditor refuses to issue an audit opinion and it's game over, it should be game over. Yeah, I mean, and we're facing a lawsuit and we're going to have to spend money there. Like, yeah, of course. I mean, anybody who says we're not entitled to make our money, I think is just, they're just, it's the type of person who would never accept short selling, full stop. Because, you hear people say, they'll say things like, well, short selling has an important role to play in the markets, but, okay, somebody who says, I have no problem with short selling, but has a problem with short selling. So yeah. I have no problem with short selling, but they shouldn't be allowed to come. This person just doesn't like the fact that we look for people who are lazy, people who are incompetent, and we try to capitalize on that. And I think that's, at the end of the day, what really bothers people about short selling is we are holding a mirror up to them and saying, you're overpaid. You may be dressed really well, you maybe sound really smart, but you're not.
But you took activism to a new level with your video of comparing SOLUTIONS30 to the movie The Godfather.
I mean, because they do have a lot of mafia links here. Why do this? Look, we're in a battle for people's attention spans. And in the 11 years that I've been doing this, the human attention span has gotten significantly shorter. And it's the fault of these things that it's happened. So one of the challenges in this business is no matter how detailed our research is, no matter how many thousands of artifacts we have of evidence, how do we communicate it in a way that people not only can understand, but they're going to want to understand? This emergency monetary policy that has existed since the global financial crisis has anesthetized people to risk. Going into 2020, I was fond of saying that the bar for what people would consider to be material in one of their holdings has gone up each year because there's just more and more apathy towards dysfunction. I mean, I'm not, if you look at the US, which, like I said, I don't think is riddled with criminal companies, but the overall environment has just been greatly corroded. And in France, in Germany, in the US, the rule of law has eroded. I mean, I can't be sober-eyed and tell you that the rule of law is strong in America. And part of that is because people do not care. And we just don't want to face uncomfortable truths. So I sit here and I say, I care about this. I think other people should care about this. But how do I compete for their attention against COVID and all of the other horrible things that might be going on? How do I make people want to hear the whole story instead of reading 3 sentences and saying like, it doesn't matter? So that's a major challenge. And I'm sure it's a challenge that you guys face in your business too. Everybody who's in the information delivery business, which is part of our business, faces this challenge. And that was just one way that we're trying to adapt to this challenge.
SOLUTIONS30 stocks has rebounded strongly. Have you planned or are you considering going short again?
Okay, but it was down again today, pretty big. Look, the stocks, Wirecard even squeezed after it reopened. Yeah, if the thing bounces up high enough, we'll punt on it. But I mean, at this point, what we would be betting on is we'd be betting on there being a well-resourced investigation into SOLUTIONS30. And one of the reasons that I'm a little bit concerned about that is this really struck me just a few months ago when we decided, okay, we need to alert the authorities about SOLUTIONS30. And we asked, which authorities? And this is really something that I think is interesting but problematic about Europe. That with effectively open borders and normal times open borders, companies operate seamlessly across them with money, material, people moving between them, criminal networks too. But who is responsible for investigating? Because if this company, Solutions30 is domiciled in Luxembourg, it's listed in France. Some of the biggest issues, some of the issues we found were in Hungary, Romania, and Italy. Who investigates? Because if you look at these regulatory agencies, I mean, each one of them has institutional priorities, and those are not necessarily the same priorities at the same time. And then within them, the individuals who work there also have their own priorities, and they want to play visible roles in successes. So if I'm sitting in Italy and somebody from Luxembourg calls me up and says, hey, we're looking at this case, we could really use your help. I don't know, how much would I care if I'm in Italy and you want me to spend a lot of time and resources digging into something, but at the end of the day, it's your case, and I'm not going to be recognized for it. So I think this is a fundamental problem that exists in Europe, that at least in the US, despite our myriad problems, we have one Department of Justice, we have one FBI, they handle all of the interstate kinds of cases, but in the EU, I mean, who do we talk to? So, I mean, we did approach various authorities, but, and this is one of the reasons why, if you go back to the comment that I made about, how the prisoner's dilemma has not yet kicked in for the directors and officers at Solutions30, I think they feel like they can get away with this because in part of that dysfunction, that they're far more comfortable operating throughout Europe than any regulator or investigator would be.
Thank you very much for your time. That's all we wanted to ask you.